Well, hello and welcome back. It's time for another episode of the StoneX Australian Cattle and Beef Market Report. My name is Ripley Atkinson. I'm the Australian Livestock and Commodities Manager for StoneX based in Sydney, where we're developing price risk management tools for the Australian beef industry to help the sector manage market and price volatility with our Australian feeder cattle swap. We're brought to you by StoneX Group, a Nasdaq-listed global financial services network with 100 years of experience in global commodity markets. Remember that the trading of derivatives, such as futures, options, and over-the-counter products or swaps, may not be suitable for all investors. Derivatives trading involves substantial risk of loss, and you should fully understand the risks prior to trading. Past results are not necessarily indicative of future results. Earlier this week, I released the StoneX H2 2025 Australian Cattle Market Outlook. The report covers all the relevant key production figures and metrics for the next 6 months, my views on supply and demand, prices, and some opportunities and risks I see in the market, and what basically, in my view, what it's going to mean for the beef industry for this year. To access that report, head to stonex.com and you'll be able to access it along with my weekly market updates. But that's what this episode's on about this week, is that H2 Outlook report. What's involved and what we're going to chat about today will be about that report itself. So what we're going to get into, the headline or top line figures from that report, what it's going to mean for the beef industry for the second half of this year, and subsequently the combination of both of those with some other factors included. The third point will be what impacts or what the outlook is for prices and supply for the next 6 months. But to get started on the key production figures, or what I've called the key summary table within the report, this year I've revised from the January report anyway, the cattle herd higher to 42 million, growth on 2024's figure of 1.46 million or 3.5% roughly. The reasoning behind that is the strength of the northern season, that the north where the bulk of the cattle herd have experienced this year, improved fertility rates and subsequently higher marking rates of those calves, which will drive increases in those numbers. But also importantly, you see this a lot in the south, or a lot in drought times in general, but for the south that's been through drought and liquidation of its cattle herd, producers will become a lot more fussy with fertility. And I do expect that because producers have had to cull, they will be or they'll have preferential treatment towards those fertile cows or breeders in general. And what I think that will mean is, when those cattle are joined, particularly the increasing number that are now joined in the south during the spring for a spring calf, what we're going to see is the contribution over the longer term of that will contribute to the herd size as well. I'm not necessarily indicating it's going to make any difference this year, because it won't, but over the longer term, that's something to be aware of. Moving down the supply chain, I have forecast grain-fed turnoff for 2025 higher to 3.3 million head. That'll be an increase of a bit over 5% on the 2024 figure. And grain-fed turnoff effectively is the number of cattle collectively across Australia we push out of feedlots to be processed. So last year's figure at 3.14 million head was a record, and I'm expecting that record to be broken again in 2025 on the back of more cattle supply, but the completion of feedlot pen space opening up and a shortening of days on feed, which will increase the turnover or number of turns feedlots can get through within a year. Off the back of that, with increased numbers of grain-fed cattle exiting the system, and a herd size that's been or will reach its biggest figure by November 25 in my view in more than 20 years, we're going to see slaughter volumes reach their highest levels in nearly 50 years. So for 2025, I've got national cattle slaughter reaching 9.3 million head. That will surpass the 2014 figure of 9.2 1.226 million head, and it'll be the highest slaughter volume the country's produced since 1978. It gives you some context on what I'll talk about what these figures mean for the beef industry and what the results and the outlook actually looks like. But the significance of near 50-year highs in slaughter volumes can't be understated, and the first 6 months really contribute to that. I had a look at the historical data to ensure that my forecasts were going to reflect what we've seen over the last 10 to 15 years in terms of the first half of the year and the second half of the year and output volumes. In 2024 and 23 respectively, cattle slaughter increased on the first half of the year results by 14% in 24 and 11% in 23, which gives you an idea about how significant the second half of the year is. And it's something like 10 to 12 of the last 15 years, the second half of the year has always outperformed the first. And when we consider the northern regions of the country, or again, like I mentioned on the podcast regularly, north of Dubbo, for where the season changes, a lot of those producers are holding cattle at the minute, whether that's into feedlots or also those direct to works cattle for the grass-fed bodies. When those cattle start to move in the second half of the year, which they will, they'll have to go. They're terminal animals destined to enter the supply chain. They're not breeders. That increase in volume is going to contribute, in my opinion, quite significantly to high slaughter figures we'll see in the second half of this year, and that'll get us to that 9.3 million. Already, for quarter two, as an example, I'm expecting when the figures are released in mid-August, we'll see quarter two slaughter numbers at least the highest since 2014. And at a minimum, if at the bullish end of those estimates, we could see the second highest quarterly slaughter volume since 1979. So, as I mentioned, the cattle cycle is well back on the way to production highs, and that 9.3 million figure reflects that. You've also got to look at where weekly data is at the minute. And when we consider the ABS to NLRS slaughter differential, which means NLRS or MLA slaughter report is a voluntary report. It doesn't cover the entire processing sector across the country. It's missing about 28.7% as per the quarter 1 25 results. So when you look at the 150 to 160,000 head of cattle we're processing at the minute and include that 28% differential that isn't captured in the market, it actually puts slaughter numbers on par with the 2014-15 weekly volumes. So we're back at weekly highs as well. And the H1 volumes, when they're released, or at least the formalized figures are released by the ABS in mid-August, in my view, what it's going to show us is figures higher than 2019 and higher than 2014, and basically in line with 2015. And what that tells you, they're the three previous highs in slaughter figures for the last 20 to 30 years. The 2025 results will be well on track with both of those. But moving beyond that, it's something I've spoken about a lot, and I think referencing the grain-fed turnoff is a key aspect to that because it's such a big contributor. Carcass weights will come down this year naturally. The influence of the South is going to be there, but also the fact that we're going to process more females, which are traditionally lighter bodies, both through the supermarket trade system for export fed heifers and also cows in general. We're just going to process more females, which will drag that carcass weight back. On top of that, the South will obviously deliver some lighter cattle because of the dry conditions, but we're still looking at a carcass weight of 307 kilos a head for the 2025 forecast. And what's underpinning that is the influence of the grain-fed sector, with more grain-fed cattle turned off at a heavier carcass weight on average than a grass-fed body. That will be a big contributor, and also the investment producers have made in genetics and land management to be turning cattle out both into a feedlot system or also direct at heavier weights than what they would have previously. So the fact or the combination of a carcass weight that's remaining historically very, very elevated, in the top 5 to 10 years on record, coupled with slaughter volumes reaching 50-year highs, we're going to see beef production rise another 11% on the 2024 record to 2.85 million metric tons. So that's looking at an increase of about 187,000 metric tons on the 2024 figure, and that's driven by the increase or combination of carcass weights and 50-year highs in slaughter figures. When we move past that and look at beef exports, I've got beef exports rising 14% for this year as well to 1.53 million metric tons. Already year to June figures, or the first half of the year relative to the first half of 24, which in itself was a record. This year's data, or this year's exports, are already 17% ahead of last year. And much like I spoke about carcass weights slaughter, when you look at beef production and exports, both of those are highly correlated to slaughter volumes and the increase. And what I mean by that is you typically see the second half of the year, or there is a very strong correlation between the second half of the year slaughter numbers increasing, which translates to higher beef production and exports. And that's not necessarily surprising, but because of the increase I'm expecting to see in slaughter, or the overall outcome of slaughter, when you combine that with beef production, the export volumes will be stronger in the second half of this year as well. And on the back of that, I think we'll see at least 2 more months at a minimum break the monthly all-time monthly record set in June of 25 of 134,000 metric tons for beef exports. We'll see that again at least twice. July's on track at the minute to push 135,000 tons to 140, but I think at a minimum we'll see that record broken at least twice. Another one which I don't or haven't spoken about a heap on this podcast, but it deserves a mention because of its contribution to the beef industry and how important it is live export. I've kept my forecast for 2025 export volumes the same as the January release at 850,000 head of cattle. Now, I think that could be a little conservative. We've seen recently in the media, a journalist has recognised cattle out of the Port of Darwin or exports out of Darwin are at 10-year highs for the financial year of 25. So, I could be on the lighter side here. And I think to add to that, the timing of Eid al-Fitr and Ramadan, which is coming earlier in 2026, I think you'll see some really strong results in Q3 and Q4 of exports as those Indonesian importers position themselves to have cattle on feed ready to be processed for those celebrations. So I could be on the lighter side with those export numbers, but I'm pretty confident that we're going to see some good growth again this year. And I think that's really pleasing to see because it's such an integral cog in the beef industry and its supply chain, and it will take some pressure off the system if it needs with taking cattle when other parts of the supply chain like feeders or the processing sector can't handle it. That's the top line results. Continued growth in the herd, 50-year highs in cattle slaughter, and record beef production and export volumes. A pretty positive picture to paint. But the figures are all good and well. We want to have a look at what it actually means for the beef industry. And, I think it says a couple of things, but what I'd start with is, the sector's well on the way to cyclical highs in the production cycle. So if you're looking at when the results all come out and it works out how I'm expecting it to, we're going to see 2 consecutive years of really strong slaughter volumes, and secondly, record beef export and beef production volumes. That gives you an indication of the fact that we're on the way up out of slaughter and production volumes, or particularly slaughter in 21, 22 at near 40-year lows. So as I talk about that cycle, when you picture it in your head, you're going from near 40-year lows in slaughter numbers to near 50-year highs in slaughter numbers, and on the back of that, record production and exports. So that cattle cycle is well on the way to reaching its peak. And the cattle herd subsequently, is delivering those big volumes of stock to make that a reality. But I think importantly, as we know, the beef industry needs everything to line up, and feedlots and processors clearly are handling these high numbers of cattle. Now, as a part of that, feeders are looking to shorten up days on feed to get higher turnover through due to those, those larger numbers of stock available to them. But, we can't ignore the influence of the growth in the feedlot sector over the last 5 to 6 years, 7 years, and how much of a contributor that's made to the fact that we're now realizing really strong herd numbers and subsequently numbers of saleable cattle, they're able to enter the feedlot. And that growth in the sector is accommodating those bigger numbers. But, the next stage of that, which I think is really important, is obviously the processes and the investment processes made during and post-COVID in labour, sourcing labour, retaining labour, and growing their labour workforce is a big part of that, but also the investment processes have made in improving their operations, and investments in the kill floor or being able to handle heavier grain-fed cattle, a new plant opening up in South Australia, aspects like that, and the combination of the supply chain expanding, if you will, is a really big part to what we're seeing, and it can't be understated the fact that all of these pieces of the puzzle are connecting because we are obviously dealing with quite a lot of cattle if slaughter numbers are going to near 50-year highs. But importantly as well, the beef we're producing is at record levels. The supply chain can handle that volume and we can get it through the system, get it to port and get it out the door. The other aspect, to think about that is the fact that it's happened quite quickly. So, as I mentioned a moment ago, slaughter numbers at 37, 38 year lows in 21, 22, and now we're going to slaughter numbers at 50 or near 50-year highs in 25. It shows you how quickly the buy side of the equation or the step beyond the producer of the supply chain can recover. And I think that's something important to recognize. But, moving beyond the supply chain and looking at the market, when we talk about the growth in the feedlot sector and then look at where the market is at the minute and how it's generally performed for 2025, the strength of the market has obviously been underpinned at a producer level or at least for trade cattle by those northern New South Wales, Queensland producers. And, that feeder market has been very well supported by the feedlots because they've got expanded space. So they've got the capacity with more numbers going through their feedlots to demand those cattle. And it's not as if one or two feedlots have looked to expand. It's, the bulk of them. And because they've all expanded at or around similar times, that's given them all the capacity to compete heavier. And more competition is only good for market prices and demand. And that underlying demand has been very strong, in the feedlot space this year. And that's a big part of it. If you look at the slaughter job and the slaughter cattle, similar sort of situation. We've particularly seen that come to light earlier. Well, I should say earlier, but more recently with those slaughter stock, both the cows and obviously grass-fed kill cattle, particularly because the south has gone very dry and there's just a lack of those numbers down there. But the increased capacity with weekly slaughter volumes nationally nearly at 10-year highs or operating at 10-year highs, that means more demand. You add in the fact that the south has run out of grass-fed kill cattle and cows, which is seasonal, of course, but it's been probably become more acute because of the dry conditions over the last 18 months to 2 years down there. And the combination of dry conditions, but also expanded capacity in the processing sector has meant that demand is much stronger. Add in the fact that everyone wants to get a piece of the US market with trim prices for 90s at $11, and you've created this near perfect storm for those processors to compete really heavily on grass-fed cattle, particularly cows to source trim and remain profitable. And on that profitability sense about what these numbers and what this report means for the beef industry and across the supply chain, what I'd also say is we are in a very unique rare occurrence at the minute where generally, at a general level, the whole supply chain is profitable. And that isn't something that happens very often. We know, the industry swings in roundabouts and it is very cyclical, but the way the market's transpired and the way cattle are being delivered, the availability of supply and the support of export markets has created this situation whereby everyone is profitable. And that's something that should be celebrated. And, it's something that is quite unique. It doesn't happen very often. I think that is a really important takeaway, is that profitability, um, is shared equally across the supply chain so far this year, and I'm expecting a similar result for the next 6 months generally. I think, moving beyond the bigger picture figures and what they mean, I think when we have a look at this year and or certainly the next 6 months and what my views are on the outlook for prices and supply, I'll start with supply. And I'll say that, I'm not surprised to see the market strengthen through winter. Um, I would be honest to admit I got my call wrong in the January report to say the market was going to soften. I was probably ignoring the fact that, winter you typically do see prices improve, and the focus really does become on the feedlots and the processing sector because there is that natural lack of producer demand. But, when we look at the next 6 months, I think we're gonna see the peak in the cattle price, within the next couple of weeks into early August, and I think we're gonna see some downside following that as cattle begin to come forward, particularly in northern or central New South Wales, north into northern New South Wales and southern Queensland, where the peak selling period of the year for most of those producers is between now and Christmas. And I think, with some early reports starting to indicate the oats crop is starting to cut out for people across the north of New South Wales and into parts of southern Queensland, I think that aspect may hurry along the turn off of cattle probably earlier than we might have expected. And naturally, that supply was going to come anyway. Add in the fact that there is a really large number of cattle that have marched or been trucked and travelled, from southern New South Wales, Victoria, and South Australia into, northern New South Wales and Queensland. And those cattle were all purchased, with a trade or a background trade in mind. Some of which obviously will be kept to grass-fed kill weights or sold to supermarkets, but the the end point is probably irrelevant. It's more the fact that the number of cattle are going to come forward in the next 6 months. Some will come forward in, Q1 26, no question. Certainly on, some of that lighter country, the further north you go in Queensland, growing slower, but there will be a really good chunk of cattle sold in the next 6 months that were purchased, by northern New South Wales and Queenslanders, when those late March rains turned up. Even at the Weiner sales, there was a big contingent of Queensland and New South Wales buyers, both feedlots and backgrounders going hard. So those cattle are going to arrive in large numbers over the next 6 months or so. That was going to happen regardless of season. But, with the indication that some of these oats crops are starting to falter, if you will, because of a late plant and a mild winter and a lack of really early solid frosts, there is the potential for that situation to hurry itself along a little bit. And there will be the gap between the oats crop cutting out and subtropicals coming forwards, which is another situation to consider. A lot of these cattle are terminal. They're destined for the supply chain. It's not a breeder on an oats crop. It's your feeders and grass-fed steers or supermarket cattle, etc. Something to be aware of. Um, I think we're going to see the peak of the market in the next couple of weeks, and it'll soften through after that. What I would also say to that point is that I think it's important to remember that the weather is obviously a really big determinant in this situation. If the season performs as average and you get those rains in spring that northern regions start to expect as you move towards summer, I think you'll see a turn off volume of cattle pretty normal. Yes, it'll be increased because there's more cattle about, but I don't think there'll be any sharp adjustment or shift. Moving beyond, that supply and demand, running into a few what I've called bold calls in the report. I think the slaughter to 9.3 million, or the highest since 1978, is one of them. I think another one that we should really be mindful of is this, or in my view, the fact that I reckon we're going to export over 415,000 tonnes to the US this year, which would break the previous record set in 2014. That, I think, will be something to celebrate and something quite exciting, particularly considering the fact that, there is so much going on around the world at the minute and there is so much uncertainty, but the ability of Australia to deliver product into that market and give that market what it needs in the face of such uncertainty is a credit, and it's something that should be celebrated. Finally, there are some real opportunities in the next 6 months. I think the EU Australian Free Trade Agreement is one of them. Something really that is worth monitoring and watching. There is the risk that the beef industry and the broader red meat industry gets shafted and doesn't get a fair and equitable deal. Stuff around UCAS and things like that. And I suppose most importantly, the volume of product we can send in there and the type of stock, etc. But, aside from that risk, I think it's a real opportunity. And we know it's, collectively the 27 country block of the EU is the third biggest economy in the world. The consumer in there is very high income earning. They're sophisticated, and, you've only got to look at some of the figures already. Despite the difficulties getting product in there because of the way our export structure works at the minute without that free trade agreement, we're still growing our exports into that market. And I think the EU is a real opportunity to get that deal done and signed this year, and something that, I think is quite exciting for the beef industry. The other one on a more local level, is a trade opportunity for producers to look at, value adding their cull heifers, joining them and selling them PDIC into a southern herd rebuild market, or purchasing cattle and joining them this spring to sell into a southern herd rebuild market. I think that's something that's got some real capacity and got some real legs, and one to keep an eye on. But that wraps us up for this week. I think generally, the beef industry is in a really positive position. Yes, there's some bumps on the horizon, but it's no different to what we haven't had before. And I think it's a really exciting space to be in. Everyone's making a bit of money at the minute, which is also quite rare, but we are moving to some real strength in the supply of what we produce, and clearly the world over in our local market wants it. And, I think that's something that we should really celebrate. So if you want to have a look at the full report, and my weekly market commentary that comes out every Thursday, go to stonex.com for the full access. And if this report or today's episode or any others have raised any questions, reach out to me and send me an email to ripley.atkinson@stonex.com, or record a voice note of yourself where you're from and the question, and I'll answer it in the next episode in a fortnight's time. Feel free to share the podcast with anyone interested in hearing more about the market. There's plenty going on at the minute, so it's important to stay up to date with the latest developments and information, so you've got it in your back pocket. But thank you for listening today, and until next time, take care. Cheers.